Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is a video about my weekly thoughts on market happenings for the week ending October 8, 2021. So firstly, inflation is looking a little bit more permanent, making markets think that there's going to be a rise in interest rates, and that is going to be coming sooner rather than later. If we are in an inflationary period, growth stocks especially will not do as well because their future cash flows are worth less than previously due to the increased interest rates. The US 10-year Treasury Bills are yielding about 1.5%. This is being caused by a relief rally in the stocks since higher T-bill yields indicate an appetite for risky assets in the markets. Of course, as issues and problems mount, the worries would get investors buying the safe T-bills again, lowering the yield. The US had a jobs report, and it turns out that private jobs added in September were higher than expected. In fact, 568,000 jobs were added versus a 425,000 that were expected. We in Canada added 157,000 new jobs last month, while economists were expecting 60,000. So the Canadian jobless rate is down to 6.9%, which is good news. Back in the US debt ceiling limit is still a question, which is roiling the markets during the week. Thursday, the market advanced because the debate eased off and an agreement was reached, pushing the debt limit to the beginning of December. Basically, it's a short-term truce, just kicking the can down the road as always. In Europe, the energy crisis worsened as energy prices soared. A cold winter could cause a crisis for natural gas for heating, and of course, increased energy prices will cause inflation and could slow the economy down. Russia said they would increase the natural gas supply to help the energy crisis situation in Europe. To say a few words about the tapering of bond buying. The tapering would slow the buying of long-term bonds, dropping their prices and rising their yields, and this steepens the yield curve. This, of course, helps banks who borrow on the short end of the yield curve and they lend on the long end of the yield curve. Canada has already started tapering, the US hasn't and has been talking about it for a while. So what are some of the questions and issues concerning the markets? The first is unemployment rising or falling? If unemployment is falling, that's good news for the markets. Is inflation transitory? Well, if it's transitory, then there probably won't be a significant interest rate increases. But if inflation is permanent, there will definitely be significant interest rate increases. Is more bad news coming from China is another question. If there is, that will certainly affect the markets to the downside. The fourth question is, will corporate profits continue to rise at the 25% rate that analysts have forecasts? If they will, the market will probably keep increasing or stay steady. But if these expectations aren't met, the market could well take a downturn. And then lastly, is the stock market undergoing a small correction, or are there greater storm clouds on the horizon? So to summarize the week, all of the North American indexes are up, which is great news, and oil is up a little bit. And of course, Monday this coming week is Thanksgiving in Canada, so happy Thanksgiving to all of us Canadians. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.